So at the time we're recording this podcast, the government is in its second week of shutdown. We think we're probably in it for a while longer. Question is, first of all, what's causing the shutdown? Second of all, what's the real impact of this? And what could be the impact, particularly if basically the Democrats got everything they wanted. They walked out. They said, we're going to shut down the government. They said, we've drawn a line in the sand. And how's that going to affect us? So how does it affect us now? That, is maybe not as important as how's it affect us going down the road. And we're very fortunate today on the Wealthability Show to have Pete Sepp from the National Taxpayers Union, who is a taxpayer advocate. And Pete, it is just terrific to have you and your organization with us, period, but certainly great to have you on the Wealthability Show.
Oh, it's a pleasure to be here, Tom. I often listen to and view your show.
Oh, thank you. That warms my heart. Thank you very much. So, Pete, let's start off. Just tell a little bit about you and your organization and what you guys do.
Sure, I've been working with National Taxpayers Union now for 37 years. So I started out answering phones and they kept promoting me until I became president about 12 years ago. There have been a lot of changes, not only in Washington, D.C., but in all the state capitals when it comes to tax policy over those many years. So I've seen a lot. And unfortunately, I've seen shutdowns before. I've seen dysfunctional budget processes before. I've seen concerns about the IRS from small business owners before. All of that is coming to a head right now in ways that seem historic, but are also ahistoric in that this time we have so much more at stake with the shutdown and with fiscal policy going forward.
Yeah, so let's talk about what in your view, and I get everybody's got a little different view of what this shutdown is about. In your view, what is it that the Democrats are looking for and why they shut down the government?
In short, about $980 billion. That's what they're looking for. They resent the fact that the so-called One Big Beautiful Bill Act passed not only to reduce tax burdens, tax rates, create new deductions and credits, especially for small business, and we can get into that in further detail, but it also made a start, only a start, on spending restraint at the federal level, primarily by looking to slow the growth rate of the Medicaid program, the joint federal-state program that is meant to provide health care for low-income Americans. What those reforms did, basically, overall, were to slow the Medicare growth rate in spending from about 5% a year to a little under 3% a year. That's the projection. Whatever else you hear, that either doomsday is coming or that the federal deficit is fixed, either side, they've got it wrong. This is nothing but a start, a down payment on a lot of spending reforms we need to make to get the federal government's house in order.
Now, one of the things the Democrats have talked about is we've got this expiring provision of basically the ACA, Obamacare credits they were enhanced temporarily during COVID, and they're set to expire, I believe, at the end of October, right? And so the Democrats want to make them permanent. And there's a lot of discussion back and forth on that. What's the cost of doing that, of extending it?
The cost is huge when you take a look at the total number of Obamacare subsidies. Then you separate out that temporary COVID era extension. You're really looking at a cost of around $100 billion a year. And that's frightening when you think about all the other monies that the federal government spends on healthcare programs already. And that's only the beginning of the Democrat demands here. They not only want to make permanent that very temporary COVID era Obamacare subsidy, which is actually subsidizing health insurance for households making up to $600,000 a year. They also want to roll back those One Big Beautiful Bill Act's Medicaid spending
Mhm.
restraint provisions. And so the total adds up to nearly $1 trillion over 10 years of fiscal impact. Even in Washington, D.C., that's a lot of money.
Wow, that is a lot of money. $1 trillion over 10 years. That is a lot of money. So let's say they were to get it. What would happen from your viewpoint? What happens either from a tax standpoint? Because they don't have, I've never heard them have anything to pay for it. So what happens? Either it's coming adding to the deficit and we're just printing money and we're, I presume, causing inflation at that point, or somehow they're going to have to find that money.
Right. I mean, deficit spending is nothing more than a tax increase on some future generation of Americans. That's all it is. That's what borrowed money means. Somebody else down the road gets to pay it back. If they don't pay it back, that's a crash in our sovereign credit rating. We've already taken some hits from some of the credit rating agencies. Moody's has downgraded the federal government's credit rating. A couple of others have over the past 10, 15 years. The next round of downgrades could be very serious for the United States. What people need to understand is that over the past 10, 15 years, the federal government has switched its borrowing strategy to short term, meaning they're not locking in interest rates on sovereign debt year after year that could keep the debt service from getting out of control. Well, that works fine if interest rates are consistently low, but if they're very volatile, like they have been over the past several years, suddenly a lot more debt than just the annual deficit is coming due every year for you to refinance. And the Treasury is hard put to find decent interest rates that debt can be refinanced at. That's why debt service is now a bigger expenditure in the federal budget than even national defense.
So let me get this straight. So the Wall Street Journal has gone after um, real estate developers who went after short-term rates and so lots of investors lost money when they raised the rates like that. Lots of investors lost money because they had variable rates, right? This is what caused the crash of 2008 was the variable rate mortgages, right? But what you're saying is that the government's actually using variable rate mortgages on our future. And so they're subject to the same interest rate fluctuations that that they go after real estate developers and homeowners that, hey, you shouldn't have done this, and yet the government did it because it lowered their borrowing costs at the time.
That's right. The federal government is the biggest short-term borrower in the United States today, the biggest dice thrower when it comes to
Wow.
interest rates.
Wow. Okay, so I've always thought that the worst tax that we have is inflation. And we're seeing gold prices have skyrocketed, silver prices even more so as a percentage have skyrocketed, where we just blown through the $50 an ounce record of silver prices. Gold's well over $4,000 an ounce, which to me indicates some pretty rampant inflation because they tend to just gold tends to just hold its value. It doesn't really change in value. Okay, so if you're going from 1800, 5 years ago to 4,000 today, that signals a very massive inflation. I presume that's from deficit spending, is it not?
That is definitely a major cause. We also have tariffs to worry about. The fact that that is a tax on imported goods and raw materials that can raise prices here in the United States. And we have the interest rate impacts to worry about as well. But federal spending increases, and better yet, the failure to get control of federal spending look forward is fueling a lot of inflation and the inflation expectations. We always try to look backward at the latest inflation report. What did it say for last month? And what does it mean for us ahead? But the longer term outlook on the United States right now is pretty bearish. When you look at other countries actually running away from the dollar as their staple pegged currency,
Mm,
when you look at the price of gold and silver, and when you just look at the everyday failure
right.
of the federal government to get control of its own finances, those are all up signals for inflation rates, and they're up signals for the very long term.
Yeah, and unfortunately, inflation is the worst kind of tax because it's the most regressive tax, meaning it hurts poor people way more than it hurts rich people. And so this is what's troubling to me when I hear politicians say, "Hey, we're not, we're gonna reduce taxes." The big beautiful bill reduce taxes. Or we're going to only tax the rich. I'm going, but at the same time, you want another $1 trillion, aren't you? By taking that $1 trillion, aren't you effectively really exchanging? You're saying, well, we're going to give benefit over here to these people, but the average person is going to pay for that. I mean, that it gets paid somehow, correct?
That's right. You squeeze the bubble somewhere else into the economy when the federal government inflates its own spending. And small business owners suffer especially much here. I mean, families, they end up having to work harder or borrow more just to afford groceries and whatnot. What if you're a business owner and you're operating on a 3 to 5%
Right.
profit margin, keeping your head above water? Suddenly the price of your inputs goes up 3 to 5%. You're treading water already. Imagine if your taxes went up, or imagine if you were regulated to the degree that you can no longer run your business in the same way. Those are all threats from government, not your customers, not market changes. That's government.
So you've said that government shutdowns are always about taxes. So what do you mean by that?
I think that when you look at the dysfunctional budget process, the fact that in 43 of the last 47 fiscal years, Congress has not completed a budget on time. And in most of those 43 years, there's been at least one government shutdown or the near threat of a shutdown. That indicates that there is a problem of agreement on an appropriate level of taxes and spending that can be covered by the taxes. That's generally what it always comes down to. Massively different visions on what government should be taxing and what it should be spending.
So is it just income tax? You mentioned tariffs. What do you think? I mean, what do you think the prognosis is here? What kind of taxes are you going to end up with outside of inflation, which I think again is certainly a tax?
Well, we're very fortunate that the One Big Beautiful Bill Act made many kinds of tax relief, originally acted in 2017, permanent. And in fact, many of them are inflation protected now. The child tax credit, for example, was indexed to inflation in the bill that President Trump signed July 4th. And that means as long as inflation goes up, the child tax credit will be adjusted accordingly for the inflation rate. We've had that in the income tax brackets for the better part of 45 years now, but certain parts of the income tax still needed that inflation protection. I think we're going to have to turn to the payroll tax, which is going to become very important just 7 years from now. That's when the Social Security Trust Fund can no longer afford to pay all of its obligations to retirees and those on disability. And what that means is an automatic, immediate 20% or more reduction in benefits. That is going to put tremendous pressure
Right.
on either restructuring the benefits or raising taxes.
Well,
That's going to mean a big reckoning.
let's talk about that because President Biden actually went after that. He wanted to raise the Social Security tax, right, which now is capped at about 100, let's say 180,000, capped at about 180,000. He wanted to raise it, actually put a donut hole in there so that up to 400,000, from 180 to 400,000, there's no Social Security tax, and after 400,000 is on 100%. I am curious what your thoughts are on Social Security tax just being unlimited. Why is there a, well, I think there's always a benefit to lowering all taxes,
Yeah.
but do you think there's a possibility then that the solution will be we're just going to take the cap off of Social Security?
Well, I think it's quite possible that the cap will be adjusted. Now, National Taxpayers Union, taxpayers is our middle name, and we are very concerned every time Congress and the president talk about raising taxes. We think there have to be adjustments to the future benefit formula of Social Security. It is actually very heavily skewed toward higher income retirees. When you look at other countries' Social Security systems, they're much flatter. In other words, just about everybody gets a similar benefit.
Mm.
Here in the United States, depending on how much income you earn, it can be a much better benefit in retirement. And taxpayers had to accept using an inflation measurement called chained CPI whenever the tax brackets are adjusted or the child tax credit. In Social Security, they use a more generous inflation measure for the cost of living adjustments every year. We ought to be taking a look at that. These are not pleasant decisions to make. I wish we didn't have to do any of this,
Well,
but the alternative is the failure of Social Security.
yeah, let's take that detour just for a little bit on Social Security, because we're actually seeing in France that their government's failing because of this exact issue, right?
Yes.
I mean, it is failing over the limitation on pensions, and they're not. It's like so. So I'm at the age where I just qualified for Social Security, okay, but I qualified for Social Security later than some people that were born earlier. But why is it where we're having longer lifespans that Congress has such a tough time passing legislation that increases the age at which you start getting Social Security? I mean, why is this difficult? And why is it causing? I mean, in France, they're a little different because they rely so heavily on Social Security. They have a tough time saving. They just don't make that much money. But in France, they rely on it even more. But they're the same thing. President Macron over there, he just wanted to lower it. He just wanted to raise the Social Security age for people that are just starting in the workforce. He's not
Yeah.
talking about for everybody, and yet they have massive that it's shut down the government. So what is it about Social Security benefits that is such a trigger point that they can't even begin to talk about it?
I think it has to do with the power of the over 65 vote in this country. They get out and they vote at a rate that is generally higher than that of younger folks and middle-aged folks.
Well, and
Now,
yet we're not talking about people that are over 65. We're
that's
talking about
right.
people who are 18.
Yeah, it's the curious dichotomy when you think about it, Tom, because right, very few, if any, of the changes that would need to be made if we did them right now would affect current retirees. And at the same time, how many polls have been taken that show younger workers have little to no faith that
Right.
Social Security will be there for them?
So why not make
And
the
so
change?
yeah, and it's very strange. And when you look at places like France, where they're talking about raising the retirement age to 64, where
Right.
here, depending on your age,
67.
it's 67. And when you look at places, you're very right about the saving rates in these countries. And I'll make a plug again. The entrepreneurial sector here is much stronger. Try starting a small business in France or England or Germany. You are up against a mountain as opposed to the United States, where it's tough enough. Those kinds of factors should be working in our favor. We should be able to have this conversation before the Social Security system reforms itself in a pretty awful way 7 years from now.
Yeah, and before it's a matter of, I mean, to me, changing, I mean, Americans are living longer. I mean, the the longevity potential is so great that, how we don't adjust Social Security for lifespan is just crazy to me. But let's kind of go back to the shutdown here for a minute, if we can. Let's talk about Medicaid, because this has really been a big part of this, is the Medicaid issue. And of course, the Democrats are saying, well, the Republicans are just, hurting the poor and so forth. What's your view on Medicaid and the role it plays? I mean, frankly, I'll be honest, I'm a big fan of actually everybody having access to medical care and insurance. But why is Medicaid such a hot button?
I think a lot of it has to do with the recent expansions that have occurred under President Obama and subsequent Congresses. Originally, Medicaid was a program primarily for those who couldn't work, who either were disabled or they had to take care of loved ones. They were generally not able-bodied adults on Medicaid. The program was conceived as part of a broader safety net with nonprofit and for-profit hospitals offering charity care, other programs whereby pharmaceutical manufacturers would just give away drugs to hospitals. A lot of that has been replaced by government programs. You have the so-called 340B discount drug program, which forces pharmaceutical manufacturers to offer discounts, and that program is rife with problems. Medicaid has grown in a similar way to the point where some folks on Medicaid probably could get private insurance, maybe not the best kind of healthcare insurance, but probably better insurance than what Medicaid could provide in terms of its care. And so our question here is, how much of the Medicaid program can we afford to continue for the neediest Americans while making sure that Americans who are just above that poverty level, or, 2 times above the poverty level, can actually buy into an affordable health insurance plan? That was the intent of Obamacare, and it didn't really work out that way.
Yeah, so let's go back to that, because that you brought us back. I want to go back there anyway. You said that, and we've heard Speaker Johnson say this, that the Obamacare credits could go to somebody that makes as much as $600,000 a year. I presume you've actually studied that. Now I'm curious, because I don't have any clients that makes even close to $600,000 a year that qualify for the credit. So what is it that's causing that?
That's all to do with the temporary expansion during COVID of the subsidies to cover people who might have been out of a job. And this could be middle class individuals, it could be upper middle class individuals who were going through a tough time because there were mass layoffs
Right.
during the COVID era. Thank the Lord above, they were not long lived. Our economy bounced back reasonably quickly, but there was a lot of unknown, and there were a lot of fears back then that people would be thrown off their health insurance and it would be in the tens of millions. And so Congress does what it often does in a crisis. It reacts very, very strongly to the point where they probably overreacted. They did that with a lot of the loans that were given. They did that with the unemployment assistance, which was ripe with fraud. States weren't prepared to administer it properly. We ended up spending probably $1 to $2 trillion that were just unnecessary
Yeah, for
to
sure.
pull us out of that crisis.
Yeah, for sure. But so I want to go back to the 600,000, because I can't get there. So because I'm sure there are a lot of our listeners going, "Hey, I'd like to be able to get that credit, and I make less than $600,000." So what is it that allows somebody you know, who does get it? Who's that person that makes $500,000 a year that gets the credit?
That can be someone in a high cost insurance area with a family of maybe 4 or 5 children who can't get coverage elsewhere in the market and needs a really large subsidy in order to continue health
But wouldn't that
insurance.
come back when they file their tax return? Where wouldn't that get clawed back when they file their tax return?
Not all of it. Some of it, yes, but not all of it. And
Huh, okay.
here again is our problem. The federal government doesn't really account very well for what the net impact is there. They can figure out how big the subsidies are and what the spending is on that. And there's some IRS data to show how much was clawed back, but we're operating on imperfect information here. And the other
Got it.
thing, of course, is that
Okay.
the old Obamacare program used to have an income-based cap for eligibility of subsidies. The COVID subsidies got rid of that cap. And so 600,000 is like the upper limit at which all of the other eligibility factors can come
I
into
see.
play.
I
And,
see.
and
Okay.
beyond that, no, there's really no way you can get a subsidy.
Yeah, and most of that would be clawed back. I get it when you file your tax return. So that now is making sense to me. So but all of this surrounds medical care, whether it's Medicaid or whether it's the marketplace and the Obamacare credits. None of the politicians have figured this out.
Mm-mm.
Okay, have you done studies and have you, you know, what is the National Taxpayers Union? What would your be response? What would be a good solution? Because we're broken. I mean, our healthcare system is completely broken. It's very clear it's broken. What but then socialized medicine is also broken. So what's in your mind? I actually have my own solution, but what's your solution?
There are at least 10 things that we have to be considering here. One is empowering people with their own dollars to get the insurance coverage they need rather than the coverage the government says they need. In most cases, people fear being bankrupted or having their entire savings taken away from them by a catastrophic medical
Right.
emergency. We need to have deregulation in the insurance markets to allow those kinds of plans to be offered to folks so
Mm,
that you may have an upside exposure of $1,000 or more, but that would be it. A policy like that would suffice for tens of millions of families. We also need to work on solutions to affordability of prescription drugs. That's only 10 to 12% of all national health expenditures, but they're very visible. I think cutting out the middlemen
mm.
that keep people from getting rebates directly at the prescription counter when they go to a pharmacy, that would help. We need to combine all of the various tax
Interesting.
programs that, HSAs and all of the others into one type of medical expense deduction or credit that people could understand. Those are at least a few things we could do. There's a dozen more.
So I want to throw out a question that's been on my mind for many, many years now. Um, why not just allow people to buy into Medicare?
That is one way. And, the Medicare program has problems of its own and they need to be
Sure.
fixed. You know, uh,
But
um,
you then now you're not forcing, but if you had a catastrophic,
that's
this
right.
is the challenge is you've got CEOs of insurance companies, health insurance companies that are making $50 million a year. Okay. I find that abhorrent. I'm going, I just don't get it. How can how can a CEO of a health insurer make $50 million a year when now I mean this is part of this whole issue that's going on, right? Go,
Yes.
you mean you're going to take the credit away from somebody who's making $80,000 a year, but you're going to give a CEO of major health insurer $50 million a year salary. So I get why there's upset. about this. I mean,
Sure.
even a Marjorie Taylor Greene, who is probably as far right as you go, she's upset about it. So
That's right.
my question is, why can't we just do something simple? I mean, because buying into Medicare, I mean, the reality is once you get to a certain level, now I'm at that age where you really have to elect into Medicare. You don't have to use it, but you have to elect into it.
That's right.
Um, but Medicare is no cheaper for me because of my income level. It's no cheaper for me than going out to the marketplace. It would be just as cheap for me to get insurance outside the marketplace. Is there some reason is it just the health insurance lobby that's preventing that? What's preventing that as a potential solution?
Yeah, I think that, again, you'd have to make a lot of fixes to the Medicare system, the waste, fraud, and abuse, the lack of consumer input into some of the care they get versus mandates. Sure, setting that aside, you could create a system where you had buy-in, voluntary buy-in to Medicare. Another part is on the tax side, the fact that you have Kaiser Permanente, for example, as a nonprofit
Right. Yeah, that's an issue.
organization. I mean,
Yeah.
how can you, if you were United Healthcare and wondering, well, why are we liable for all of these taxes, but one of our competitors, which isn't substantially different from us, pays
We
nothing?
have the same thing in the banking industry with credit unions,
Credit
right? With the
unions.
exact same issue. I mean, we have this issue. I mean, we have the same issue, frankly, with Harvard.
Yeah.
How is Harvard tax exempt on the billions and billions of dollars that it brings in from inventions by its students? I mean, none of this to me makes sense from a tax standpoint. I mean, that I think you hit it the nail on the head. That the way we deal with nonprofits is just wrong. I mean, there's just so much of this that should just be taxable because you're allowing, like you say, a Kaiser Permanente non-taxable. Now you have United Healthcare who's competing with that and they're paying 21%, the other and Kaiser's paying zero. The same thing is true with the credit unions. Same thing is true with the schools, right? So this is a we should probably do a whole show on this, Pete, where we just talk about the issues with the with the and I'm going to not call them nonprofit. I'm going to call them what they really are, which is tax exempt. They are not nonprofit organizations. They are tax exempt organizations. They are very profitable organizations. So with that, let's just take one last piece of this, and that's President Trump. He's been thwarted for temporarily, but he's actually fired some people during the shutdown. He wants to fire more people during the shutdown. There's been a massive disruption at the IRS. How do you think this is going to disrupt both the implementation of the One Big Beautiful Bill by the IRS and Treasury, and frankly, more importantly, to most of us as entrepreneurs, next year's filing season?
Yeah. Well, next year's filing season, few people may know this, is already underway behind the
Right.
scenes at the IRS. I mean, they're having to retool their computers to be able to accept different kinds of electronically filed returns. They've got to alter the returns themselves. They have to be prepared to answer different sets of questions, especially from small business owners who are really at the tip of the IRS's spear when it comes to compliance issues. I've seen this
Yep.
time and again. They are the first ones the IRS goes after
Yep.
because they have just enough income for it to be lucrative for the government and not enough income to fight back. And that's a grave concern of ours that if we don't have a fully functioning government that has a reasonably staffed IRS, not at the level that Joe Biden proposed, they can do with less, but they need the right mix of personnel at the right time to issue all the rulemakings and guidance surrounding One Big Beautiful Bill and to be on hand when small business owners have pretty technical questions about how the laws actually apply to them. If you're stuck on hold for more than an hour and the IRS operator says, well, your question is out of scope, go ask your tax preparer, that's not helpful.
It's not helpful, especially when it's the tax preparer calling the IRS.
That's right. And, that is probably the single most important customer service element the IRS needs to have during the shutdown is to keep the practitioner phone
Yes,
line open.
it is, and there's certainly been some lack of they put in a lot of new people that don't know. I mean, literally can't answer a fairly basic question, right? And they put them on the tax practitioner hotline, which I'm going, that should only be experienced people. They should actually know what they're doing.
Exactly.
They're the ones who should be, and they should answer their phone within 5 minutes. I mean, in my mind, that's where if you're going to take the time and the money to hire a professional, that professional ought to then be able to get through. I totally agree with you on that. So, Pete, final thoughts on the impact of this government shutdown on taxpayers and particularly entrepreneurs.
I think aside from the IRS and the need to have good service while practitioners and entrepreneurs are working through their own issues, there are entrepreneurs who contract with the federal government who are facing uncertainty in revenue flows. They'd like some answers. Also, the Small Business Administration and the Office of the SBA Advocate, which works to provide good perspectives on the regulatory and tax challenges facing small businesses. They're not working at full strength right now, and it's very important that they do because decisions are still being made that impact small business and entrepreneurs. Despite the shutdown, there are many, many employees still working with or without a paycheck in the federal government. And in many cases, we can't find out who they are and what they're still doing for us. When you think people who have cases in tax court, as an example, the penalties and interest keep tolling on their case, but they have nobody they can talk to.
Right. No, I was just reading this morning a tax preparer saying, I can't pay, the client can't pay their bill online. There's nobody to talk to about how to get that bill paid, and the tax returns due. Right. So how do you deal with that? I mean, you're going to send paper check. The government won't send you a paper check, but you have to send a paper check, and then it just sits there. Then there's always an argument that they actually get it on time, even if you you've got proof, certified mail return receipt, by the way. Always send things to the IRS, certified mail return receipt. Always. If you're going to send paper in. Always. So important because you've got to prove, because they might not get it for 2 months because it just sits there. Okay. But you got to show that you actually submitted on time. So that's very important. Final words, Pete, on what can entrepreneurs do, given that the shutdown could last easily through December. What can entrepreneurs do right now to prepare and deal with both the current shutdown and the potential for the problems in the future?
The first thing is start your tax preparation early. Your own tax season has to start happening now. If you're an exporter and your business is involved in sending goods or even sending services overseas, you're going to have to do more planning because the Department of Commerce and other places may not be around to answer some of your basic questions about how the new tariff policies work or what types of licenses you might need to have. Those are all important questions, and they're going to take a lot longer to answer. As you think of them as an entrepreneur, type them into your computer and figure out, how am I going to get an answer in time that it won't dramatically impact my cash flow? And the answer to that is almost always, well, there's no time like the present. Get going on it.
Well, thank you. That absolutely, of course, warms my heart. You're hired, Pete. I love that you're advocating for the taxpayers. Now is the time to be planning. Do not wait. We get that filing season really just ended. Yes. When we're recording this, it's just just now ended, and we've got the next one coming up. Great advice, Pete Sepp from the National Taxpayers Union, to start planning now, start preparing, make sure your bookkeeping is in order, make sure all of your records are in order, all your documentation, because you've got to do an even better job when the IRS can't do their job as well because of all the disruptions going on. Pete, if you would, tell us where people can get more information about the National Taxpayers Union.
They can visit us online at NTU, our initials for National Taxpayers Union, NTU.org.
Awesome. Thank you so much. And remember, when we discuss these things on the Wealthability Show, because what we want is we want you to be prepared to take actionable steps so that you can deal with things like the government shutdowns, increased in taxes, disruptions to the insurance, whatever it is. Because when you do get prepared, you're always going to make way more money and pay way less tax. We'll see you next time on the Wealthability Show. Thanks for listening to the Wealthability Show. If today's episode gave you a new perspective, remember this: the tax law is not your enemy. It's a roadmap. And when you know how to follow it, you can build real, lasting wealth. If you're a business owner or investor who's tired of overpaying taxes, the Wealthability Accelerator is your next step. You'll have the opportunity to work directly with me for 80% less than my standard rate. And I'll personally guide you through how to change your facts so that you can change your tax. Go to wealthability.com/bonus and apply today. Remember, it's not just what you make, it's what you keep.
This podcast is a presentation of Rich Dad Media Network.